All right, everybody, just a quick update on a trade. Let me walk you through how this all went down. So last night, 8 o'clock, I was taking a look at the Facebook daily chart, and I realized that there were some opportunities for a trade here. We were in a stage one squeeze on the daily time frame, and we had two inside days. So we were going to be going into the third day of an inside day. And I decided that if this started making moves in the pre-market, it would be something worth trying to trade. So I looked for around a 3.75% move in Facebook. And the plan was if we had started gapping up or had begun running in the pre-market, then I was going to look for Facebook to make a move beyond the 340 and that we should try buying the 340 or better calls, because those out of the money calls would be a lot cheaper. And if we were wrong, if it all just unraveled and fell apart, we wouldn't be putting a lot of money at risk, right? We wanted to use the closest expiring options out of the money, maybe less than $10 was kind of what I was thinking. And if there was a possibility, I also wanted to run a 0-day trade on this. Now, I didn't get the 0-day trade, although as you're going to see here in a minute, that also would have worked really well. All right, so let's take a look at this. And the target on these was 100% profit, 100% return on the risk. Okay, now let's go take a look at what Facebook did. This was the setup that I had on the chart. This is a stage one squeeze. Now, what that means, it's just a little phrase that I use. A typical, regular, everyday squeeze uses Bollinger Bands that dip inside of a Keltner channel, and the default settings on that is 2.0 on a standard deviation. Well, if we load 3 Bollinger Bands and set one of those at a 1.5, one of those at a 2.5, and we leave one of them alone, then we have 3 different levels of a stage, right? And we have a stage 1, stage 2, and stage 3. This is what we would consider a stage 1, okay? The 1.5 standard deviation Bollinger Bands have slid inside of the Keltner channels. And we had an inside day. So what did Facebook do today? It spiked and ran all the way up to 341.86. So we got above that 340 level. It has made a move greater than 3.75. This is what it did today in the move, right? Not bad, not a bad move at all. And as you can see, if we had put on the 0-day trade using the 345 strike, that would have worked out perfectly. And we could have made even more money. Unfortunately, I didn't get it on. And so I didn't get that part, but I did get the others, right? And that's, at least we got some of the move. The idea that we can see a trade like this coming in the evening, the day before, does require a little bit of planning ahead. Now, we didn't know that it was going to make this move. We weren't for sure. And as I said in the chat last night, there were a couple of things that I needed to see before I would consider this a good trade setup. So in the pre-market, I wanted to see it rally up from where it closed to where it was going to open above yesterday's open price. Okay, so today, as I'm recording this, it is Friday. I wanted to see Friday's open greater than Thursday's open. And then I really did not want to see price fall below yesterday's open price. Now that I've got these lines marked out, let's go back into the intraday and see what this looks like. Okay, we're going to move this line. That was Thursday's high, Thursday's open. We're going to mark the low of Thursday, even though we don't really need it. And we'll even mark the close of Thursday. Okay, now let's go back in and take a look at this. You can see how price made it all the way up to yesterday's high and took a rejection and fell all the way back down to the open. And then it ran again and it broke out and gave us a little bit of a Busby right there, and then continued to run all the way to lunch, where we got a head and shoulders, and it's all now falling apart, right? Perfect. So how can you spot this in the night before or maybe in the pre-market? There are a couple of different things that are on this list that we were just looking at. One of them is called a red to green. One of them is the inside day. Now, although we're looking at target, a red to green, come back here, this is a red to green. Forget target for a moment. Let's look here. This is a red to green. We closed in the lower portion of this red candle the day before. And we were going to open up today higher than yesterday's open. So this is R2G, red to green. And that's what it's called if you're looking for, the name of a strategy, the R2G strategy, right? Just R2. And you normally see it written in lower cases, R2G, like that. All right. So that's an R2G setup. We had that. And then we also had inside day. All right. So Thursday was inside of Wednesday's candle. And we were breaking out of both of those today. All right. So we had inside day and R2G. That's what we saw before they opened today. Once the market opened today, we then got an R2G, or excuse me, an inside day breakout. All right. So if we go back and look at the chart, price came up and bounced its head across yesterday's highest price, pulled back, and then broke out of yesterday's price action. So it was an inside day breakout. We started the day inside of Thursday's price, and then we rallied out, and that makes it an inside day breakout. Right now, Facebook has an average daily range of 2.5%. This is measured from a daily chart. It counts back the last 21 days, which is one market month. And it says in the last month, what's been the average move in Facebook? The average move per day is around 2.5%. So the logic was, if today happens to be a blowout day, something better than normal, something bigger than average, what would it probably end up being? Well, if 2.5 is an average move, let's cut that in half. That'd be 1.25. If I add 1.25 to 2.5, I get 3.75. That was the target that I used. Now, if that seems kind of arbitrary, if you're thinking, nah, that seems a little random, you can go back and look at what a quote average breakout day looks like, and it's going to go around 3.75 to 4.25. Facebook actually did move 4.25%, but then it faded back to 3.75. So we're right on schedule, right in line. Now, why else did I use that number? If we target this candle to that candle, look at where Facebook hit today. Not to the penny, but pretty darn close. That's where it hit and then began to pull back. So in an impulse move, that is what our line in the sand was, that we didn't think it would make it beyond that level, because we didn't have extraordinary reasons to think that this was going to run. It wasn't news based. There wasn't an article that came out there. The CEO didn't do anything, no new products, no product releases, nothing like that. All right. And because nothing like that was coming out, We didn't think it was going to make it an extraordinary day, not that big of a day. And that's exactly what we got, right? Now, on the other hand, what if it didn't work? Well, the options that I bought this morning were $7. So if it didn't work, I was going to lose $7. I don't like to lose, but we're talking about 7 option pennies, $7. If you add my commissions in there, if I had lost this trade, it would still be less than $10. Hey, I'm not going to lose sleep on that one. You know what I mean? That's okay. I don't like it, but I'll sleep. Right? So nothing special or extra about a trade setup like this. R2G, inside day. We could even add things like, stacked moving averages, or maybe fanned out or spread out moving averages. I had that picture of Target for a reason. So if we go back to Target here for a moment, on Monday, Target had a pretty wide day, and it was an indecision day, crossing back and forth below that green line. And that green line is the 20-period daily moving average. Tuesday, Wednesday, and Thursday, this market just could not get out of Monday's price action. Now, in the pre-market today, on Friday, we gapped up outside of the 20 and the 10, and we opened above all of those, faded down, bounced off of the 20, and rallied all the way up to the 262. Now, I went ahead and traded Facebook, but we could have just as easily have targeted this, and our goal would have been the 262, the highest of that range, right? So again, another really good setup based on something very simple, no brainer, easy to find. We can look at a chart and see this. Inside day breakout above the major moving averages into a level of resistance after multiple days of an inside day, right? And the longer we stay sideways, the bigger the move is likely to be. If we back up and we look way up here, look at all that congestion, how we stayed sideways for a real long time back here. And then when it finally made a move out of that range, it was a very large move, right? And it's because the market is just like a living thing in nature. And in nature, you cannot contain energy without releasing some of that energy along the way. If you attempt to do that in nature, you get things that blow up. Same thing in the marketplace. The longer we stay contained, the longer we try to compress a market, sooner or later, it's going to blow up. And the blow up can make phenomenal trading days. This is a very large move in the market. It's exactly what we had today. So that's it, guys. As a Facebook review, the trades that were taken today in Facebook was 20 contracts at the 342.5, and I paid $7 for those. That entire thing would have gone a lot better, but I had a lot of things going on today, and I could not watch this trade as well as I wanted to. So I traded it very cautiously, and I got out really early, but I was okay with that, right? I couldn't dedicate the time required to watch the trade, so I just took a little nibble and got right back out. That's the trade, guys. I hope you enjoyed the video and learned something from it. Make sure to check out our courses and next level library on the Bullish Bears website so that you too can learn how to do this. Have a good one, everybody.